Here's the thing. You just bought a brand new Apple Watch Ultra 2. In the US, you're paid $799. In Japan or with a tax refund in Dubai, that same watch might cost you even less. But in Brazil, that exact same watch cost nearly double over $1,400. In Turkey, it can be even higher. Why? Why does your location decide how much you pay for the same piece of tech? We're sold a dream of a global connected world, but the price tag tells a different story. It's a story of taxes, corporate gains, and something called market value. But what does that really mean? It means what they think they can get away with charging you. Let's start with the elephant in the room: taxes. Governments slap charges on imports. They call them tariffs. You call it a hidden markup. Think of it like this. An iPhone 17 is made overseas. It gets put on a ship. When that ship arrives in your country, the government says, "Nice phone." To let it in, pay us a fee. That fee gets added to the price before it ever hits the shelf. Different countries have different fees. Places like Brazil have huge ones, sometimes 60% or more, to protect their own factories. Some places like Hong Kong have almost none. But here's the kicker. It's not just the official tax. Companies know the final price will be higher, so sometimes they just charge more from the start. They use the tax as an excuse. You blame the government. They keep the extra profit. It's a neat trick. Then there's the strategy. Big tech companies like Apple and Samsung are like street vendors with different carts in different parts of the market. They charge what the local crowd will pay. In a wealthy country like the US or Switzerland, with high average salaries, the price is high. In a country like India or Vietnam, where the average wage is lower, the price has to drop or nobody buys it. Take Spotify or Netflix. They cost a fraction of the price in India compared to the US. This is price discrimination. It's not a dirty word to them. It's just business. It's like selling umbrellas. On a sunny day in a desert town, you practically give them away. During a monsoon in a tropical city, you charge a premium. The umbrella is the same. The need is the same. But the willingness to pay is totally different. You are living in the monsoon city for tech. But wait, you say, can't I just buy from the cheaper country online? Now we get to the real lock on the door. Companies hate that. They call it parallel importing or the gray market. They build walls to stop you. The most common brick in that wall, the warranty, that PlayStation 6 you bought from a cheaper country online, the manufacturer's warranty is often region locked. The local service center looks at it, sees it's a Japanese model and says, "Sorry, we can't help you. You're on your own if it breaks." Sometimes they use different power plugs or slight software variations. Sometimes they just refuse to sell to a shipping address that uses a freight forwarder. They are actively working to keep those price zones separate. It's like being in a nightclub with different ticket prices at different doors, and the bouncer is checking your ID to make sure you bought the expensive ticket. Let's talk about competition. In some markets, the fight for your cash is brutal. In China and parts of Southeast Asia, brands like Xiaomi and Realme are making great, cheap phones. They drive the price down for everyone. Samsung can't just charge $1,000 there easily. They'd get crushed. But in the US, who's the local competition? There isn't one. The big players compete mostly with each other. That lack of a true budget alternative lets prices float higher. It's a quieter fight, so you pay more for the punches. And don't forget the stores themselves, the retail markup. In some countries, electronics are sold through giant chains with huge bargaining power. They demand a lower price from the tech company so they can offer a deal to you. In other places, the journey from ship to your hand has more middlemen. Each one needs a slice. That slice comes from your pocket. So is it all just a big scam? Not entirely. Some costs are real. Running a big advertising campaign in New York costs more than in Mumbai. Building out a network of certified repair shops costs money. Complying with your country-specific regulations costs money. Those costs get baked in, but often those are just the ingredients they talk about. The secret sauce is pure profit maximization. So what's the verdict? You are paying more because the system is designed to make you pay more. It's a mix of real costs and pure strategy. Your wallet is a battlefield where tariffs, corporate greed, and local competition meet. They know you want the latest gadget. They know what your neighbors are willing to pay. They have built legal and digital fences to keep the prices where they want them. The next time you see that shiny new device, remember, its price isn't just about circuits and glass. It's a calculated guess of the maximum number in your bank account you'll hand over. And that number changes before the plane even lands. If you want to know which country actually has the cheapest tech in 2026, hit that subscribe button. We are tracking the prices so you don't have to. Welcome to the war.